Come in.
Hello, everyone. Welcome to this webinar today. I'm Peter Towers, Managing Director of ESS BIZTOOLS, and I'm joined by Amanda Gascoigne from Amanda Gascoigne Consulting. How are you today, Amanda?
I'm great, thanks, Peter. How are you?
Very good, thank you. We've got a lot to get through, so we will get started and we will talk about a lot of issues as we go through.
Hi, everyone.
Okay, the current challenges for SMEs, there's plenty of them. And obviously, what's happening in the SME market is very important for accountants. High interest rates, high inflation, business failures, liquidations are significantly higher than what they were over the last few years. The CEO of MYOB, Paul Robson, published an article in the Financial Review in February whereby he outlined a lot of the problems because SMEs had a lack of understanding of fiscal management. One of the questions I'm going to raise with you as we go through this webinar is, was that because they had not been advised, mentored on how fiscal management issues would affect their business? Some of the items that Robson commented on were as follows. Fiscal management skills were not evident. There were significant problems after 6 months of trading. What he was implying was that these businesses started off with enough money to last them 6 months, but they hadn't taken into account some of the other issues, which included the lack of understanding of suppliers' payment terms. Perhaps some of these businesses that MYOB surveyed were put on cash on delivery by the suppliers because they are becoming wary because of the business failure rate. And the cash flow forecasts that had been prepared hadn't reflected the fact that a cash payment was going to have to be made, or 7 days or even 14 days after delivery, especially if they'd factored in that they would be automatically granted the 30-day term. Lack of familiarity with credit terms was another issue. Now, I'd advise a client if they can avoid giving credit to do so, but it's part of the business pattern, isn't it? Credit's given. But I think some people assume that they will get paid in 30 days. And that's what Robson was talking about when he commented on inappropriate systems for control of debtors. And the other big issue was not planning for payments to the taxation office, which was perhaps one of the real issues after 6 months of trading. After Robson wrote that report, we also this week, or last week actually, received the report that's been produced by the Australian Small Business and Family Enterprise Ombudsman, Mr. Bruce Bilson, who has made a number of comments as part of a release of a new document, the Small Business Pulse, which we'll come to in a moment. Bilson indicated that the tax office is in hot pursuit of tax debt owing, and we all know that, but it's also one of the great issues confronting SMEs at present. Amanda, what do you see on these issues as they affect SMEs?
Look, I think, yeah, definitely the ATO really heating up the activity on, collection of debt. That is a big thing. And I believe that so many businesses have actually been used to having, that bank of the ATO supporting them. And that is not going to happen in the future. So it's really important to be getting ahead of not just, prior debts, but staying on top of the new debts that are, the new obligations, which is a part of having payment arrangements. So I think the debt is an issue. I agree with that fiscal management point from Paul Robson in that, a lot of businesses don't actually understand the complexities of having a business. The barriers to entry are so much less these days than what they were previously. And they just seem to think that the accounting software does it all. Just this morning, I was showing a client just some of the consultations the ATO have underway and looking at them from an individual point of view, a small business point of view, and intermediaries point of view. There are so many things the ATO are looking at and getting consultation on, which is then going to flow on to more work for accountants as well. But that is not really being communicated to small business clients that it's not just what's in that accounting software. There's all these things coming, and the role of an advisor is actually not getting easier. It's getting more complex. Obviously everyone is able to do it. They've got the talents, but we've got to start communicating that how we can help our clients in that fiscal management piece. The bit that you talked about in relation to payment terms, I guess people, when I first started in practice, it was like, yeah, 30 days, we'll give you an account for 30 days. That was customary. Now, and then I moved that to 7 days because people were just pulling that out. I had bills to pay, I had my staff to pay. So I actually brought that to 7 days. And then I gradually, so this is a tip for accountants, then brought it to payment prior to lodgement of a BAS, of a tax return, of anything. So I think we're actually seeing more, which is effectively COD, but the COD stuff wasn't as common back 10 years ago. And I think people just think, oh, we've got to give someone 30 days credit. No, you don't. Particularly accounting practices, we don't need to do that. And then we should also be advising our clients that, what are their payments terms? If they've got to pay someone in 7 days, why are we giving our clients 30 days to pay? So that really needs to be looked at. But no, but people they're just sticking to what's always been done. And I think that's the issue, that accountants can help their clients really get a hold of the drivers in their business and what they want out of their business, because we're also seeing that a lot of small businesses are not actually getting a decent income.
That's
And
right.
that is problematic. We've got a labour shortage. They could walk into a job tomorrow and get probably, $20,000 what they were more than what they were getting when they started their business. So if we're taking the risk, we need to be getting the return. So I think as accountants, we really need to step up, and it's not about selling more to your clients. It's actually about helping them. So I think it's a great discussion that we're going to have today, Peter.
Okay, thanks, Amanda. We'll just
Those slides.
go back to the.
And if anyone has any questions, feel free to pop them in the chat box that we can, expand on. If there's things that you want expanded on, we certainly can do that. But this is a real pet topic of mine, because this is what I did when I was in practice. I did do more of that, helping our clients really achieve their financial goals. And it wasn't just about doing a BAS, a tax return. It's more about that's the end product. So I'd love everyone to shift their mindset that we're doing all this work for clients, and at the end we get a BAS, or at the end we get a set of financials, and we've actually delivered all this value to our clients in between. So
That's
it's a bit
right.
of a mindset shift from the accountants, and also how we can then sell it to our SME clients.
Okay, let's just move on then. And the current challenges for SMEs. We'll now move on to small businesses have deteriorated. I mentioned earlier that the Small Business Ombudsman.
Here's the report, everyone.
Sorry, Amanda.
I was going to say, there's the report. There's a copy of that report that you're about to talk about. Yeah.
The Small Business Ombudsman's released a report. Some of the key information, which is very important for accountants, but I think the whole report's very important for accountants. You should read it. Small business conditions have deteriorated 3.5% in the last 12 months. Business operating environment has been in decline for the past 2 years. Fewer small businesses are considering expanding or transforming their business as they struggle to stay. Concerns by small business owners about their business viability have increased. Economic activity. Now, this is a real important statistic that everyone should be thinking about, I think. Economic activity generated by small business is currently 33% of GDP. But in 2006, it was 40% of GDP. So in the intervening 8 years, small business share of GDP has decreased by 7%. That's a real worry, isn't it? And small business currently provides jobs for 42% of the private sector workforce, whereas back in 2006, that figure was 53%. Now, one of the questions that Amanda and I are going to ask you later is, what's all this do for the accountancy market? Because what I see here is a shrinkage of clients for SMEs. The other issue that we should consider as part of this is what the then tax commissioner, Chris Jordan, had to say when he warned at Xerocon in 2022. You must understand that if your business model is high volume, low margin, simple tax returns, your business will not be viable in 3 to 5 years' time. And that now means 1 to 3 years.
Sorry, and Peter, now with that, you leave the slides on. With that, I will say the latest stats from the ATO have come out in the last probably 3 weeks of those, the first lot of lodges, and it's definitely pointing towards more like individual tax returns being lodged not by an agent. So there is that uptick, and it's been happening gradually every year. So it's, we are seeing in the ATO's lodgement stats, that's what's happening. So it definitely is happening that more people are lodging on their own. So it's an opportunity then to see if we know that's shrinking from our practice, what else can we be replacing it with? And do we need to make some hard calls, this year and next year to be able to be on the front foot of that so we're not losing income?
Okay, so when we look, let's go back to what Mr. Jordan had to say. You should be looking to diversify to remain viable longer term. And I think his key items were 2 accountants, focus on becoming a brilliant and trusted advisor. Amanda, what's your view of these matters that we've just looked at? What the Small Business Ombudsman had to say, what the former tax commissioner, Chris Jordan, had to say, and that bit of up-to-date notice that you just gave us. And
look,
so where's all that lead to?
I think it is a matter for practitioners to look at a lot of things. Like we've got some, we've got a statement from the previous commissioner. We've got stats that are saying this is actually happening. We've got the issues that Bruce Bilson's brought up last week, that we've got, less small businesses. We've got, we actually have seen people exiting. We've seen that with the rise in the insolvency numbers. And we're also seeing the number of younger people entering and starting a small business is also declining. So I think one of those reports, and it was one also last year, that, the average age of small business owners is like in that 50 plus category. That's where we've got most businesses these days. We're not seeing the businesses coming through. And maybe that's because, people don't want to take the risk, or that they're getting really well paid in other industries, and they're quite happy with the work-life balance. So I know when I went into practice, it was because I thought I could make more money, I could have more flexibility and more freedom. And like I did, but that is actually getting harder and harder for small businesses and also for accountants these days. So we really need to look at how can we rationalize what we're doing? And one of the things that I'm working with a lot of my accounting practice coaching clients, and I've been talking about as I've been doing those QuickBooks talks around the country, is really looking at resetting client bases. So I'm not saying we have to get rid of all of our individual returns. I mean, I know some practices they have. They've made a call to say, I'm not doing any individuals in response to the previous commissioner, but also the fact that they feel like it's an opportunity cost. They can't make as much money out of that part of their client base. I'm okay with having that, and I was in my practice, as long as you're charging a good amount for those fees. So if you're charging, not trying to be the lowest, as an ITR cost, we're trying to bring that cost up because we're knowing that we're doing the extra work. So we're trying to perhaps, so for me, I was trying to attract higher wealth clients or people with rental properties or investments. So they're probably not going to be eaten. They're not going to be ones that are going to be lost to the system. They will still need an advisor. So we still could do that, but in conjunction with our business clients. So, and then for the business clients, I have been advocating, and I've got a blog that I wrote many, many years ago, even before COVID, that I feel like if you're a small business, small to medium-sized practitioner, and you're dealing with small to medium-sized businesses, I think the starting point needs to be about $5,000. Now, when I talk about that, people think, oh my goodness, how can I charge that much? But literally, that's what I was sort of charging. Let's think about, a set of financials, a couple of thousand as a starting point, because there's a lot of stuff we've got to do, checks and balances. We've got FBT, we've got, we do the BASs, we do tax planning. It is not hard to come up with that. And even some of the other studies have been showing 3,500 as the average fee. So if anyone, is looking at their client base and they're thinking, okay, well, let's go and look at what that average fee is, and it's only 1,500. Like, what do we need to bring it up to 2.5? Like, what do we need to bring that extra 2,500 to get it to 3.5 or 5? Think about how many clients we need to take that, we could take so many clients out of our practices and then have more time to focus on helping our clients understand the numbers better, helping them become better business people. And I feel like if we're not doing that, that's what we went into business for. We didn't go into business to be filling in tax returns and BASs. I think that's what most accountants, we want to help our clients, but we've just been compliance, and more being thrown at us. And it is really hard for so many practices to be able to get through them by the 30th of June like the following year, or the 15th of May. So something has to give, and we've got more things coming through with TASA, with all the new things that we've got to do. How can we use what we're seeing happen, what we've said that is going to happen, to really reset that client base and actually deliver these services to the clients who need it? Like, all clients need it, but are they prepared to pay? And we've got to find those people, because if we're sort of spending time, $1,000 here and $1,000 there, clients who are never going to actually buy this stuff, like, I know it sounds harsh, but we want to help them. We don't want them to say, or to be one of those statistics that have gone under. We want to help them survive. And we're going to see a lot more insolvency numbers. They're increasing. We're going to see a lot more, because all that stuff, COVID has actually helped a lot of businesses that probably would have failed earlier. That's going to be happening more and more, and we're seeing it in those numbers as well. So I think, take stock of these numbers, take stock of these reports, and how can you reset your client base so you've got less clients, you're delivering more value, more service, and you're really enjoying what you're doing, and you're making more money, which means more money in your pocket.
That's right. Okay, so we'll just...
So there's a lot to consider, Peter, but I think look, I always think some of these things are they're opportunities. So don't see a lot of this as being scaremongering. Don't see it as, oh, the world's over, as far as accounting, there's no one wants this.
That's right.
There are plenty of people that are going to want this advice. There's not everyone's going to, but that's okay. They can choose to go to another practitioner who's just doing the compliance work. And that's okay. A lot of people like that. Yeah.
Let's move on to one of the opportunities. SMEs need support from accountants throughout the year. This is what's starting to happen in America, and I'm sure it's already happening here. ESS BizTools has subscribers who are offering the type of services we are now going to take you through. I think it starts, though, when you first talk to someone who's contemplating going into business, because that's what Paul Robson was talking about. MYOB did their survey of people after 6 months, and they found that many of them failed at that stage. And by implication they were saying they hadn't got proper advice in the first place. I think we got to be more upfront with someone starting in a business and tell them the hard facts. They do need an amount of working capital, and they need to have taken into account the supplier's terms of trade. So let's just go through some of the matters that within ESS BizTools we stress to our members. Every business needs a realistic business plan. It's no use thinking they're going to be a $10 million turnover business at the end of the first 12 months, unless they've got something very extraordinary, but a realistic business plan. But they need budgets and cash flow forecasts. We call it predictive accounting because it also includes the projected balance sheet. And this has got to be the financial interpretation of the business plan. Over the years, I've seen some financial forecasts that are completely at odds to what's contained in the business plan. Sometimes they've been prepared by two separate people, two separate consultancies, and they haven't really communicated. The real key is that the business plan is what leadership want to do, and then the vision of the business plan has to be reflected in the financial forecast, because that then becomes the key document. Is this business going to be able to survive, or at the smallest hiccup, is it going to be in financial difficulties? That needs to be answered. So the financial forecasts need to be subjected to what I'm calling their real-time situations. For the first 6 months, they might be cash on delivery from their suppliers. The debtors' days outstanding might be considerably longer than 30 days. And that's why they need advice on offering credit terms to customers. They need an understanding of how the debtor systems work, because that's what Mr. Robson was talking about. Australia's got one of the highest debtors' days outstanding in the world. And that's not going to change for someone just starting in business. In fact, I think it could be harsher for them. So when they do their cash flow forecasts, they probably should be working on average debtors' days outstanding of around 50 to 60 days. Some cases it could be higher, because there's a lot of SMEs out there got debtors' days outstanding of 90 or 100 days. And that takes a lot of financing to achieve that in business. What will be the repayments required to the Australian Taxation Office, and when? These have to be included in the cash flow forecast. You could discuss with your new client about ensuring that the payments that are destined for the tax office, GST, superannuation, payroll deduction, are placed into a separate bank account so that that money is there, available when it is due to be paid to the ATO. So, Amanda, what do you think of those issues?
Yeah, I think I've just put some notes in the chat box, everyone, just in relation to, what you said about, when you set up a meeting. So when you set up a meeting with a new client, they'll often ring. This is what I found. They'd ring and say, oh, I've got an idea for a new business. Can you get me an ABN? And the accountants that are really busy will say, yeah, no dramas, I've got a great new client. I'm going to get them a BAS and charge them 165, 220 or whatever it is to get an ABN. Sweet. And then they'll say, I'll see you next, let them go, and we'll see you at tax time next year. That's what some people do. And it's possibly because they think that the client has done all their research. They think this business is viable. They don't need any extra assistance from the accountant. And they also know about record keeping, about budgets, about what they've got to put away, right? And I think that we have this assumption, and also there's an assumption that they won't want to pay for us to do that. So what I used to do in that situation, I used to get the clients in, and we would, before that, I had a little document that I would send about all the things you need to do to runs a business. And it was actually a really great document, and it was about 40 pages. And only one person ever came back and said, actually, I think this is all too hard. I don't want to do that. They were an employee of a restaurant, a chef at a restaurant, and they were going to actually buy the restaurant. When they looked at all the stuff, they went, no, I'm staying as an employee. Great, because they recognised that that wasn't for them. But what I would do, and I'd also talk about structures in that first, before they even came in and said, these are the, pros and cons of the different structures, we'll discuss these at the meetings. They'd often come in and they were still excited and they say, okay, I've read through all that. And yeah, I've decided I want to go a company. So tick, I didn't need to sort of have that discussion, sole trader versus company. They were actually, assuming they were going to make this business work. So start with the right structure in the first place. I then do a quick P&L. Just I'd have something open on Excel and say, how much do you think for this? How much do you think for that? We'd go through some charge out rates and then gave them a quick P&L. Now, that was all in that first meeting. I also made sure I put a decent amount in for accounting fees. I told the clients, this is what it's going to cost for a BAS. This is what it's going to cost for tax planning. We recommend tax planning every year and all the bits and pieces. So they knew that they were investing so much to have me by their side. They did not complain about that. And I'd set them up for the right way for that whole relationship. And what I'd often say to them, look, as you get more au fait with the accounting software, perhaps we can get you to do your own BAS. And then I'll just check that at the end of the year. Like I was empowering them to take care of the numbers, to be, careful as they were entering them in, making sure they were categorizing things correctly, not just throwing stuff in and think, oh, Amanda's going to fix all that up. They then may have be going to do their BAS, or it was going to cost me more to do it if I had to fix things up. So just that changing it, and that whole appointment, Peter, has turned in from maybe an over the phone 165 ABN application to $2,200 or maybe more if they had a trust. It could have been a $3,000 appointment. And I don't feel that I was ripping them off at all, because what happens when those clients are successful, they'll come back in 18 months' time and say, hey, I want to go and work in the mines and they need me to be a company, or someone else wants me to be a company, or like we're making all this money as a sole trader, wasting, I want to be able to minimize my tax. They didn't come to me with that because we'd already set them up. We didn't have to change ABNs. We didn't have to change bank accounts, insurances. So I feel like a lot of people might think that's a bit of an overkill, but it's setting the scene for me to be the advisor, that I don't want them to make mistakes that I actually see other people make, and then come to us to fix them up. Now, there'd be a lot of people that might say, well, I don't want to pay $2,000. Okay, well, don't, because you are never going to be my ideal client. You're a DIY person who's not going to want the advice that I give. And that's the type of thing I think we can set the scene. And it's not about over servicing or, trying to rip anyone off. It is actually giving good advice, in my opinion. Other people might differ from me, but, 18 years of practice, that stood me very, very well. I knew that, I didn't actually give people incorrect advice. In a sense, I helped them. And I think that, Peter, when you're doing those things at the beginning, it actually gives them the mindset to actually be entrepreneurial.
That's right.
And, I think, we can impart that knowledge, and, not everyone has bosses that have come from a firm that have actually done that with their clients. The more you do this, and, that particular client, we're so happy, and they'll refer more of those same type of people that we can deliver that service to. Like it does really change it can change your whole practice, the way that you're seen, in the business community, your brand, and also the work that your staff members are doing, because this is actually good quality work. I've told them it's going to cost them $50 a month to get on accounting software. Maybe it's, 100 these days. 100's cheap as chips. And I think from that point of view, when you're looking at the debtors, if they've got accounting software, which I know people say, oh, just do the Excel spreadsheet, or just bring it in and we'll data entry it, or we'll, get the bank feeds in. No, because that accounting software is going to help them with their debtors. They can set up the automatic reminders to clients. If it's not paid, it does it. Because if they're out there busy, being an electrician, they don't want to be sending, debtor statements. This will do it for you. It looks professional when you send an invoice. Get them set up with FPOS so they walk out of that job with an FPOS machine. Like, we've got to set them up for success. And I think that's a big thing and it comes with confidence too, Peter. It does come with confidence, but if you're surrounding yourself with people that are doing this, with tools such as ESS BizTools, this stuff then becomes your norm.
Okay. And there was a query, Amanda. I think I fixed it up, but one of our viewers couldn't see your chat your response.
Can you
Just check
see?
that.
Yeah, okay. May have been,
That's
may have
response,
not been,
please.
yeah. And also, another thing that we could help people by, we're knowing that payday super's coming in. If you've got new, clients coming in, or you've got people that are really struggling with making their super payments by the due date, making their PAYG and their GST, as Peter said, yes, definitely get the bank account set up, but maybe even consider them actually paying their super weekly now, even though it's not required right now, because it's not their money. And that's what I see with people who've got these big Div 7A loans, who can't pay their debts. They've actually spent it, and they've not used it to fund their business activities. They've used it to fund their lifestyle. And we need to help them get a grip on that stuff.
That's right.
Yeah.
Okay. So let's go into some of this a little bit deeper, because SMEs need support from accountants throughout the year. I'm convinced of that. My history is I have been around the accounting game for many years. I was senior partner of an accounting firm, but we always tried to supply advisory services. I had 12 years as a chief financial officer and company secretary of a listed public company. And that gave me a tremendous insight to the way the big end of town handle things. And over the years, I've done consulting for major groups like IGA and realised how they prepare their weekly performance reports. And I've had the opportunity of observing the Woolworths system, whereby the general manager of a Woolworths supermarket might have 30 or 40 departments, knows by Monday afternoon the results for each of those departments. This is the service that SMEs should also have. So what I want you to think about, if you were employed as a full-time accountant or chief financial officer in a larger business, you'd be involved in these activities all of the time. The executive, you would be supplying feedback to the leadership team. Some of it is daily. It might have been, what were yesterday's sales? What was yesterday's bank balance? What was yesterday's debtors figure? What's the payments that are going to get made this week? That type of very clear, concise information that keeps the leadership team alert. Weekly, we're going to talk about some of the weekly reports in a moment, and monthly. These are the systems that businesses need. We've got an unbelievably high failure rate in Australian small businesses, and we've got this forecasts that are emerging of lesser SMEs in the marketplace. I think the accountancy profession needs to have a good think about where we're going and make sure we are supplying the services that the market really needs. And in all honesty, even though I produce thousands of tax returns, or my firm did over the years, an annual set of accounts and a tax return does not help someone run their business. But with today's technology and communications, we're able to offer these services. Sorry, Amanda, do you have something you wanted to say?
Yeah, I was going to say, yeah, and, we're looking backwards if we're just using those, financial, the end of year financial statements. But one of the things, like I think, Peter, with some of our businesses, they might not be able to pay for that CFO service right now. But one thing that I did, or two things I did, in the quarterly BAS, maybe actually bringing some of those KPIs, some of those things to light. So just as a starting point, everyone, as you're doing your September BAS, maybe just a standard paragraph, and just for this next quarter, focus on something. Is it debtor days? And every one of your clients, you're going to let them know that what their debtor days is this last quarter compared with this time last year, or something like that. That's just getting them to realize that you're doing more than a BAS or a tax return. So it could be anything. It could be the small business benchmarks. It could be anything. Like you pick a theme that you want to talk about and just do it for every one of those clients. And then next one, do something different. The clients won't know what you're going to talk about with that next quarter, but what it can be is a call to action to a budgeting service, to having a meeting to talk about something. The second thing that I did was that, that weekly roundup type thing. whilst I didn't do that for clients because I wouldn't have been able to have the time to do that. And I'm sure a lot of the viewers here today are the same thing. What I did is I set up a template for a client for their office manager. So once a week, it was called Wendy's Weekly Wrap Up. And I had a nice little thing of all the things that I wanted my client to know and to look at. So it was, what's the bank balance? What's the debtors? What's this? And there was only, like, it was one sheet. It's a very summarized page. And they produced that every Friday afternoon and gave it to the owner of the business. Now, we used to do that stuff all the time, Peter, as business owners. So as a business owner, I would do that. I'm sure 20 years ago, it's exactly either you do it yourself or you'd have someone do that. We've sort of lost that because it's like, oh, we can get that information at a drop of a hat, but are we getting it in a concise form? So that could even be something that you could also do, everyone, is have something like a standard thing that you actually get your clients to be able to print out, whether it's, or otherwise set up a standard report in a lot of the accounting software that it picks up these information.
Okay.
And what does that do? They don't understand it. So they ring you and say, Amanda, what does this all mean? Can we have an appointment? And the more and more that financial empowerment that I gave my clients, like I showed them how to read a balance sheet, how to read a P&L. And if they had a question, they'd ring and make an appointment. Like they became curious. So like that's where, you can start off this stuff, like it could actually end up exactly what Peter said, into a big CFO type role that you could be charging, tens of thousands of dollars for. But just start getting your SMEs to do this stuff. And then what that does, when they can't get it or don't understand it, they come to you. But we're just feeding them everything. They think it's easy, that we're just pressing a button. They don't realize what's behind, what we've done behind the scenes. Perfect opportunity.
Okay. Thank you very much for that, Amanda. There's thousands of businesses around Australia still looking for support. They're wanting to scale up their business. Some people have been looking at what's happening in the stock exchange. Some of those companies that are now becoming very popular on the stock exchange were SMEs only a few years ago. Just think about it. But they need ongoing input throughout the year. I agree with what Amanda just said, and I probably should have said that before. In the system that ESS BizTools promotes, we are saying to you, in effect, to set the system up for your clients and then get someone internally to produce that daily report I was referring to. And even the weekly performance reports would be able to be performed by the internal staff if your client has them, of course. So it's completely different to what many firms have been doing. So where do you start? Number one, I don't think we should be the historians any longer. We need to move on. I think you're the guide for the future. Clients need to know what will be the result of their current deliberations. Our firm developed a relationship with an American accountant through Plan Guru, the software package we use for predictive accounting, a couple of years ago. And one of the real things that come out of those discussions were this 1 inch wide, 1 mile deep knowledge of your client's affairs. That's very important. The knowledge you know of your client's affairs for just the annual accounts and tax returns is fairly limited as to what's going on in their total business. How often do you go to your client's business premises? I've spoken to some accountants who have never been to their client's premises. I think it's advisable to go to your client's premises, to understand the conditions they work under, to walk around. In my professional career as an accountant, I always got more work every time I went to a client's premises because you'd observe things. You say, oh, I can sort that out for you, or whatever it was. The review of their systems will help you understand the weak points, which could be quite problem areas for internal control. We've talked before that every firm should have a business plan, but it's not a business plan that you sit down on your own and write. It's working with the client's leadership team. getting their ideas, because at the end of the day, they're the key people to make all this work. So it's nothing worse than walking in, and I've seen this happen. The consultant walks in and throws not throws, but gifts, hands around the copies of the business plan and says, there's your business plan. That doesn't work. You need to sit down and have one-on-one discussions with their team, and out of that, formulate the business plan and go back to them and talk to them about it, so that at the end of the day, they have ownership of it to make sure all this is going to work. I've mentioned in the preamble at the beginning the predictive accounting reports, whereby we're looking at budgets for each business operation. And this could include charge-out calculator for tradies. I find tradies are enormous industry for small and medium-sized accountants, yet many of them have got no factual basis that they've determined their charge-out rates. They've heard rumours, they've overheard conversations, or they just had a good guess. They haven't linked it to the productivity they're expecting their team members to produce, or their overhead costs. Some of them have got a system of how much they're going to mark up any purchases they make for their clients by buying the tiles or buying the paint or buying curtains or anything for a house. So that's a bit of hit and miss. The concept of using the charge out rate calculator, which was originally developed by FMRC, the Financial Management Research Centre, many years ago, will assist your tradie clients to have a greater idea of where they're going. And we've also got a similar package for retailers, which looks at their mix of products. They've got all different types of stock coming in, all different markup percentages, how they try to work all that out to ensure that they're going to sell enough of the right things to ensure they'll make their profit is rather difficult. But this package will help them to achieve that. The other key thing in all this forecasting is understanding the key drivers. Amanda and I have talked about a couple of them this morning. We've talked about debtors' days outstanding, very important. But there's also creditors' days outstanding. And there could also be another category, prompt creditors, to look at these supplier issues that Robson from MYOB was highlighting, that a lot of SMEs are getting caught on. They hadn't realised that some of their suppliers were going to be very tough. If they don't get paid on delivery, they don't deliver. They take the goods away. Capital expenditure, research and development. What's their outlay going to be? If they've got enough cash to finance this? And then it flows into the cash flow forecasts and projected balance sheets. So, Amanda, you got any comments on those issues?
Yeah, look, I really, one of the things I really love in ESS BizTools, I love a lot of it, but one of them is definitely that charge out rate analysis. I think that is absolute gold. I used to do something, very formative compared to what you have, but we used to do that with all of our clients, so our tradies. We would look at, and particularly tax planning. I had a client, and every year we do his tax planning. I said, is there anything else you want to know? He said, oh, can I just have a look at the charge out rates? Am I making enough? And we would actually do that, and it was literally on the back of an envelope. But the power of having, how many, if you think about it, I'd love everyone to go back when they go back to their offices. How many tradie people do you have? How many could you actually offer this service to? And, I don't know, what do you reckon you'd charge for it, Peter?
Well, one of our clients, I'll give you his example. When he came to us, he had 10 tradie clients, and he'd heard that we had this tradie charge out rate calculator. He then he claims there was no promotion, no advertising, just by word of mouth. He now has 110 tradie clients. He charges them on average $8,000 each more than what they were previously paying him for the annual accounts and tax returns. He has a monthly set financial accounts are prepared for about 80% of them. The rest get every 3 months. If you want it any longer, he won't act for you.
Yeah, okay.
because they also recheck the charge out rate calculation based
Right.
on the actual result. So they've got a result for 1 month, and geez, something's wrong there. They go back and look at the productivity of the individual team members, and
Yeah.
they say, "Oh, we got to fine tune if they can. If they're in the middle of a contract,
Sometimes you can't, yeah, and sometimes you can't. But I think, as like from an SME point of view, literally we've probably got two opportunities a year to change it. So you change it, 1 July, 1 January. That would be,
that's
and
normal."
some
Yeah,
people would only perhaps charge one, change up once a year, and that's fine. But I think just putting it up by CPI may not be enough, right? People know because if they haven't been putting them up during COVID or their costs have increased, particularly during COVID, Peter, when we were having, the not being able to get materials, like some of them, certain plyboard and certain things, it had gone up 30%. But if people weren't actually looking at that, they're not going to, increase, like that's charge out rates plus also the materials. So I think, if you could not get your business, your tradie clients to do a charge rate analysis, like it's probably like, I reckon, depending on the complexity and how many, employees they've got and what sort of, what their overheads and that are, like if you couldn't charge between $500 and $1,000 for you to do that calculation, sit in front of the client and add real value, I would be a really bad judge.
oh yeah,
From that, you then, so like, and as I'm saying, but if, if you've got a small practice and you think, okay, I've got X amount of tradies and I could really no brainer. And even if you sell it as an introductory rate, this is the first year I'm doing this, an intro rate. So if you find, oh gosh, I probably should have charged 1,000, not my 500 or 750. Well, next year it's the new rate. It's all a bit of trial and error. And as you get quicker, you will actually be able to do them, and then you'll be able to identify particular issues with the client. That then flows on to being able to do a budget, which then can charge another
that's
between
right.
500 to $1,000. All of a sudden, that's at $5, $6, $7,000 per client. They are not going to complain because you've helped them add how much money extra to the bottom line. You've been able to, because if they say, look, I'm going to have to pay this extra guy, like even though, and which is what I would do with the charge out rates, Peter, I say, look, the CPI is going to be like, let's say 5%. Now you could pass on, you're already paying your employee above award, but if you don't pass on at least CPI, they're getting a pay cut. But then do we actually give them more than CPI? Because we do not want to lose that client, that employee. We want to keep them. We want to keep them motivated. We want to keep that productivity level. So it might be we give them 7.5. So in my tax planning letter, I would actually talk about that. And 7.5, but they've got to get this much chargeable, their charge out rate. So there's so many different things you can be discussing with your client. So that's my favorite tool. And that's what I think from that, what you've talked about, is definitely looking at that. And then there's other KPIs that you just, we learned at uni, but who does them these days? But they are so critical. When you think about everyone, when you did cost accounting,
Yeah,
like that's what we're talking about. Cost accounting, second year accounting. And you think we're never going to need to know about the widgets and this and that. That's exactly what our clients need to know. And that's at fiscal management. They have no idea about that, Peter. And
mm,
we're not even doing it. And I know and I hear a lot of advisors say, oh, I don't feel I've got confidence. Peter, this is what I'm seeing, like a lot of small to solo accounting practice owners that have been quite comfortable doing all the BAS and the financial statements. I think, how on earth am I going to do tax planning? How on earth are I going to get into some of this stuff? Like literally, it's like riding a bike. You will remember all that stuff from cost accounting. You can add incredible value to your clients. So please don't sell yourselves short. We've got tools here in ESS Biz Tools. You've got tools in your toolkit that you got at uni. We just got to actually get them back out and use them because we've sort of lost a bit of that.
yeah,
But
that's
it's
right.
actually the critical stuff that, and if you had a bigger business, you had the CFO, they would be doing that. Do
That's
you
right.
think Woolies, Coles, Qantas aren't doing this cost accounting, but our small business people aren't? And that, I think, goes to Paul Robson's point.
That's
You
right.
know, like, and so please, everyone, if one thing we can leave you with, you've got support, you've got tools, and you've got what you've learned. Like, so don't feel like, and once you start doing it, you'll get that confidence. So if you feel like you just want to charge 500 because it might be a little bit slower for you to do it, charge 500. It's extra money in your pocket, and it's actually getting this client on that journey of that trust, and for you to do more for them.
Okay, so that's very good, and thanks for that, Amanda. And just talking about what ESS BizTools do, we run a monthly training session for our subscribers in our various packages, and we go through these discussions with you there. It's a bit like becoming a good footballer or a netballer or one of those great athletes we've just seen at the Olympics. They train and train and train. And some of these new services, you've got to do some training. You've got to go to some training sessions and do some reading. As Amanda said, go back and read some of the old textbooks. And a lot of this information was covered because SMEs have got all these problems. And 42 years ago, the FMRC, Financial Management Research Centre, was created at the University of New England with the brief to assist accountants to deliver more services to SMEs, to help SMEs in business. That's been partly achieved, but there's still a long way to go because a lot of our people are still looking for it. One of the systems we have introduced at ESS BizTools is the 52-week of the year business enhancement system. This is based on the input information we received from the American firm that I mentioned earlier that 2 years ago we were put in contact with by Plan Guru, the software company that we use for budgets and cash flows. And they were talking about their 52-week of the year system. We've adopted that concept in Australia, and that's built around the daily reports that I referred to earlier, the weekly performance report. Big businesses do this. They run themselves as a series of small businesses, yet most small businesses do not do it. Doesn't necessarily mean that you as the accounting firm are doing this work, but you set up the system within your client's office. If they have an office manager, that person can do this. And within ESS BizTools, we've got step-by-step guides as to how you do this. I think monthly financial accounts are very important. Part of the reason SMEs have got trouble around Australia, high liquidations, is that people are not getting proper feedback on their performance. If they've got monthly financial accounts, if there's a need for a correction, it can be taken straight away, not in 12, 14, 15 months time. It's too late. They're probably already gone broke. And one of the other key bits of information that the big end of town really put a lot of effort into getting and then using is key performance indicators and business metrics. Every day, when I was in the public company and we were in the meat industry, we were the second largest meat company in Australia. We had operations throughout the 3 eastern states, meatworks, butcher shops, delicatessens. Yet the key performance indicators were the key information that the management in all those facilities were getting sent to them daily and most definitely at the end of the week. Your clients need the same information. Why does the big end of town need that sort of information? They need it to help run their businesses.
Yeah.
Comparison to the monthly accounts, the financial report, and the next month is the same cycle. We're doing it all again. This is what I think the former tax commissioner was referring to when he said accountants need to be focusing on being a brilliant and trusted advisor. And we need to remember that the former tax commissioner was a former partner of KPMG. Now, I don't know whether he did small business work, but he understood the accounting industry. He was, I think, going out of his way to send a message to the accounting industry that changes needed to be made. He probably knew he was getting ready to retire, so he was hopefully doing us all a good service by warning us that things were changing. Amanda, you got anything you want to comment on that, or we move on?
Yeah, I just want to say a couple of things there. So I put a post, I put a comment before about that budgeting. So definitely with the budgets, whether it's a brand new client coming in or an existing client, get those budgets in the accounting software. Encourage your clients to print out that P&L every month and compare it against budget, because that's going to make it easy to see whether they've coded something incorrectly, whether something's gone amiss. and they can come and talk to you for corrective action before you do a BAS. Or sometimes if we're not doing a BAS, we are not seeing that till a lot later, 12, 15, 18 months, you
And
know,
that's when
later.
the problem's too
Absolutely.
big.
So one of my biggest things, and I still do it today. My business now, I have, you know, a couple of, you know, casual part-time employees, you know, it's just myself, but I still have a budget. I put it in there and it sort of just drives me, you know, like
Yep.
you know, it's just like, okay, I want to get this, you know, and I want to look, and it makes it easy if I want to I get a P&L, I can see if something's, you know, if I've overspent or if I, you know, something might have been coded incorrectly or whatever. I still use that today. I did it in my accounting practice. And I think accountants don't do this well enough for themselves either, Peter. So, you know, I talked in a lot of those QuickBooks webinars that I did, the end of financial year workload to workflow webinars. I talked about KPIs that practitioners need to do. Now, I want everyone to start doing those, getting your own budget in, getting your own remuneration up if that's something that you need to, and looking at your own KPIs. Now, once you start doing that and doing it every month, which I did on my own, when I brought a partner in, we actually still did the same, you know, review every month. That will give you even more confidence to start having these discussions. You will actually uncover things that you think, oh, I better change that. You know, productivity of staff. Why is our productivity going down? You know, what's happening? It'll give you ideas that there might be someone that's, you know, burnt out, or someone that you're giving too much work to and they're just overwhelmed and as a result doing nothing. Like these, the figures don't lie, the numbers don't lie. So one thing I would get everyone to start doing it for themselves if they aren't doing that. As far as the ATOs are going, we need our clients to have more up-to-date data. Knowing about the sharing platforms from 1 July this year, the ATO are going to be getting a lot more information from sharing platforms. So that's the e-commerce platforms, it's the online stores, it's all, you know, it's the people that are renting their house out for photo shoots, for movie, you know, movie shoots. That is all coming to the ATO, and I guarantee a lot of this stuff is never making its way to the accountants. You need to be really on the front foot with this sort of stuff. If you see some stuff that's getting spent out of a business that doesn't really look like a business expense, you know, maybe it's for something that they're doing, like with part of this data, the sharing platforms on. So please look at that, and that e-commerce is a big thing. What would be the situation if you've got someone selling online, Peter, and they're only giving you what's coming through the Shopify platform? They're not giving you, they're actually on multiple platforms, but they're only giving you one, and the rest is not coming in. Like, we need to actually dig deeper and look to see what our clients are doing. And that's to your point about going and you know, checking out their warehouse, going to their office. Now, I know we've got more remote people, but maybe just having a chat. So tell me how your business runs, you know, tell me a little bit about what you do. You know, platforms, what are you on? How do you do this? I mean, I'm intrigued. You know, ask some more questions. Now, we can only do that if we give ourselves time. And that's what I don't think a lot of accountants have, is time to ask those questions. So ask them at, you know, when you're doing your end of year annual accounts return meeting, all of that, we need to ask more questions. And, you know, what you said about Jordan, you know, about the change, I think that change, it's change is inevitable. It's always happened. You know, 18 years in practice, there's so many things that we actually that did change. We need to be agile and adaptive. And I think this actually makes it fun. So don't see some of these things, you know, I know a lot of people think negatively of some of those words that we're going digital by 2030. Actually use that to be empowered to do things differently. The TASA regulations, a lot of people don't like them, but you know, this is an opportunity. So we've got to do more checks and balances, and we've got to do more, we've got to document more stuff. We've got to have more meetings. As a result, our fees are increasing. We're going to scrutinize things more. We're going to make sure we're actually talking to you about the law and how you're applying it correctly. Like, some of this stuff isn't all that bad. So I think look at that, and it will help our changes, our current practices. So hopefully, yeah, those few things will be the impetus, because we do need change, Peter. It's not sustainable. And accounting practices, what's happening, it's not sustainable. The overworking, not enough money, too many clients, too many stress, people wanting to get out of the industry. That's not sustainable, nor is our small businesses failing. You
Yeah,
know,
very important.
it's a double-edged sword. We're trying to
Yeah.
get more people in our industry. How can we get those people in to our industry? You know, if we're not actually succeeding ourselves and small businesses, we're going to not have as many there to work with.
Okay, thank you very much, Amanda. I just want to very quickly look at the knowledge gap. And I've mentioned FMRC twice, I think, in this webinar. I was involved with FMRC for many years as an accountant. I found it very interesting. It was founded by Dr. Jeff Meredith. Later, he became professor at the Southern Cross University. His key lieutenants were Andrew Geddes, Sam Beasley, and Ian Brown, and there were a couple of others, but I cannot remember their names. They convinced the University of New England to create the FMRC with the support of the Institute of Chartered Accountants and the Australian Society of Accountants, now known as the CPAs. But their whole purpose was to drive the concept of diversifying accounting services to SMEs. This was 44 years ago. Driving the diversification of accounting services to SMEs. Are we there yet? I'll let you answer that when you look at what you're doing within your firm. But I really believe that if you do not implement this diversification of accounting services to SMEs promptly, there's going to be real difficulties in firms that don't do so. So some firms have successfully diversified. I think, though, we need to make a key word that we deliver these services rather than just offer them. Some firms are offering services on their website, but when you ring them and ask them, can you give me advice on research and development, even though it's on their website, you find that firms cannot deliver that. And it's important. So now is the time, I think, to embrace this concept. The SME market now really needs the assistance. I don't see that we're being led into making changes because of what Mr. Jordan had to say a couple of years ago anymore, because there's real problems in the SME market. They need our assistance as accountants. So the deterioration will affect the earnings of accountants. I don't want to be a scaremonger, but I think it's important that we all realise this, that unless, as a profession, we're changing the services we're offering with a reduced number of SMEs in operation and with the problems that they're experiencing, accountants will not be able to earn the income that everyone's become accustomed to earning. But by being very proactive in the delivery of some of these additional services that we are referring to, that ESS BizTools has available, I think you will more than adequately shore up your financial earnings. Amanda, do you want to comment on that?
No, I just agree. I agree. Like, actually, what I'm seeing in accounting practices, people are working longer and longer. They're getting more and more things thrown at them. And they are actually, profitability of practice is actually falling, Peter. We're implementing so much technology to apparently save our time. And I love technology, don't get me wrong. But I think the prices that we're charging for things, we're not actually taking into account that additional expenses that we're looking at that area, expenses in accounting, accounting software, and tech, and our tech stacks, and also with our cost of wages. So I think that, we're seeing profitability of firms dropping, which ultimately means it's less for the practitioner. And, in some situations, the contractors that they're using, the employees that they're employing, can actually be earning more than the accounting practice owner. And, which is not a great thing. But, the issue there is there's too many accountants that they're kind. They want to service their clients. They don't want to put fees up, but actually it's them that it's actually really affecting. So, it's everyone's generosity that's actually creating some of this problem. So I think we just need to, we probably can't go up and charge, a huge amount more to existing clients. You may, but, definitely the people coming in, let's reset the prices, and the ones that we've got in compliance, how can we actually, make some of that money that we might be losing in these additional services? And then as a whole, you're making what you should be.
Okay. Yeah. And one of the big aspects of that, Amanda, is that by offering the new services, you will be helping your clients.
Yeah.
Hopeful with proper planning, I've got to say we should be helping them to make more profits themselves.
And they will
Because
then
you'll
pay
be
you more. They'll pay you more then.
That's right. So ESS BizTools has developed a range of products. We're going to show you very quickly now, briefly, an introduction to 3 of them. These packages have been developed, they've been tested, they've been used by firms all over Australia to deliver some of these new services. So how can accountants help? First of all, you need to upskill your accounting team. ESS BizTools produces the material. We run training sessions each month. Amanda runs consultancy services for accountancy firms on a very regular basis. If you read Amanda's weekly newsletter, you'll know 5 on the fly Friday. If you're not reading it, I'm sure Amanda will be happy to put you on the mailing list if you contact her. So that will help you develop your skills. Let's very quickly, we're over time, and our apologies for that, and thank you for staying with us. But there's a range of services that a lot of accountants do not offer, but SMEs are looking for them. ESS has got subscribers around Australia offering these services month in, month out: business planning, predictive accounting reports, research and development. I think it's one of the big areas that SME look for someone to help them. The SME market spends an enormous amount of money on research and development, according to the government's figures, about $3.8 billion. Yet I contact accountant after accountant in Australia and ask them if they're offering research and development, and I get an answer no. You do not have to be a scientist or an engineer, as someone said to me once. That's what you needed to be to advise on research and development. We have a step-by-step process that will take you through the complete journey. You can do the initial part of it if you like, so that at least you can be offering some knowledge to your clients, because you'll have all the notes. You can get them on your screen that we produce as to how the R&D system works. If you then want to refer them on to someone else, you can do so. But you do that at your peril, I think, because this is the start of the innovation journey, research and development, and it will lead to very interesting work. And one thing we haven't really commented today about, Amanda, is that the other big issues that accountants have got is talent attraction and talent retention. If you undertake some of the work that Amanda and I have been talking to you today about, you will not have any problems with talent attraction and talent retention, because it is interesting and challenging work. Exporting. Have you got clients exporting? What about the Export Market Development Grant? The next round of that grant will be called for shortly, because it's expected to be finalised by the end of the year. So now you start talking to clients. Risk management, succession planning, debtors. Well, we've talked about debtors a fair bit already. But what about capital raising? When I first started as an accountant, which I won't tell you how many years ago it was, but it was a long, fair way away, all we had to help people raise capital was the first component of Section 708, which finally got embedded in the law in 2001 with the Unified Corporations Act. Prior to that, each state had their own legislation. It was a complicated area. But today we've got early stage innovation companies. We've got crowdsourced funding, equity raising, and for someone that's really wanting to go nearly to the big time, there's venture capital raising. We have got detailed systems on each of those within the ESS BizTools product packages. If you wish, we run separate webinars on each of those capital raising items throughout the year. Please contact us and we'll tell you when they're on. Also, there's the SME equity financing course that I've recently finalised for CPD accountants. And if you're interested, we're going to give you a link so you can go onto that if you've got people who want to know more about corporate governance and going about planning a capital raise for your clients, including advice on board of directors and board of advice. So we think delivering of these services will help your clients. So ESS has got 4 main product packages. The 3 that are primarily for accountants I'm going to show you now, and the subscription prices. So the starter package, which is, I think, the minimum level that an accounting firm should look at. You receive a range of the information that we've referred to today. The monthly payment, $178, or you can pay up front if you like for $1,782. That includes GST. You can go to the advanced package, which is covering a whole range of things, including those capital raising products that I just talked about before, the full research and development package, 12 months at $535 a month, or an upfront cash payment of $5,346. And our big product is the financial forecasting. Now, this is a joint venture. It includes the ESS BizTools material, so it includes everything that's in our advanced package, plus our Chief Financial Officer service package, which we've developed separately, plus a 12-month subscription to Plan Guru accounting software, and you can have 10 clients on the system at any time, and training in the use of that material presented by a fellow of the Institute of Chartered Accountants, Paul Barnaby. Now, that is 12 monthly payments of $951 or an upfront of $9,504. You pick the package that you think will suit your firm. What a lot of people do is start at the first package and go up the steps if they need to. Now, if you want to subscribe for these packages, please go to www.essbiztools.com, click on packages and pricing, log on your preferred package, click on subscribe now, and enter the discount code AGC50. I'll repeat that, AGC50. And next day, you will have access to your products. Now, Amanda also offers services to accountants to help in mentoring and coaching. So do you want to go through and talk this through, Amanda?
Just probably really quickly, Peter. So like if anyone is not getting my weekly 5 on the Fly newsletter, it's got so much great information. Last week, in response to Bruce Bilson's email about the Pulse report and those 14 steps to energize enterprise, I talked about 5 things. What I've been reading, so I talked about that report. Who I've been talking to or listening to, so it could be a webinar I've been on or a conference. A practice tip for the week where I talked about the tools, including ESS BizTools, the things that I use and the things that I recommend to clients to use to get started. Every week's different. It could be about tax lodgements. It could be about KPIs, anything. It's a practice tip and what I'm up to the following week in case I'm in your neck of the woods. And then also a motivational quote to take into the weekend. So that's at Amanda Gascoigne /newsletter to sign up to that. And then the other one is just like from a community and collaborative space. Obviously, I do offer one-on-one coaching and group coaching, but $97 a month for my Balance Firm community. And in there, we have a masterclass once a month, a Q&A with me once a month. We have freebies that I upload. We have discussions. You can come in and ask questions, and that's a really great place to start. We have a lot of people asking, like, we've got a question, we've got a client looking at doing this. What does that look like? Not really tax related, but more on the advisory space. People can ask, they ask questions, and I'll often share ATO updates. But it's a really great opportunity to help harness what we want as contemporary accounting practice owners, making good money and having better practices and better lives. So that's probably the 2 main things that I think would be really beneficial for those who are looking to really get started on this advisory journey and want people to support them.
Thank you, Amanda, and thank you everyone for staying with us. If you require any further information, Amanda just gave you some details there before, but I'll just put up these. Amanda's email address, amanda@amandagascoigne.com, or telephone 0402 805 320. If you want to contact me at ESS BizTools, peter@essbiztools.com.au, or 074724 11118. And if you're interested in the SME equity financing course, which we've developed for CPD for accountants, there's their details, cpdforaccountants.com.au courses/equity-financing. Now, we are going to send to each of the people who have registered for this webinar today, obviously a copy of the webinar recording together with the PowerPoint slides. So you'll have that information. And if you need to contact Amanda or myself, please do so. So thank you very much for joining us here today for this webinar. And Amanda, I'll put you back on the screen. We thank you for being with us today, and obviously thank you to our participants.
Thank you, and we hope that's been really valuable information to help you really either start your advisory journey or ramp it up, because your SME clients really, really do need it, and it's good for business, for practice owners, for practices, and you know, for small business as in general. But thanks, Peter, for having me.
Thank you. Thanks very much, and thank you, everyone. Have a great day. Stay safe.
Bye.
Have a good day. Bye-bye. Now the recording stopped now.
Okay, perfect.
I've just got to get the